All right, so we are live, our first live stream ever, maybe. And today we're going to talk about Tesla's AI3 software, their love that they're giving to all their cars that were made 2022 and before, the self-driving software. We're going to talk about Tesla deliveries and batteries. We're going to talk about the tech sell-off. Talk a little bit about the phenomenon of the all-in investor, maybe some macro and politics thrown in. I'm
Yeah,
Bradford
and
Ferguson.
just in general, this is our first live stream, so we're going to be a little rough around the edges, I think. But this is something we're going to try to do on a weekly basis from now on, just kind of touching on what's going on in the Tesla world, in the tech world, and in the investing world in general. So it'll be a way for us to kind of open source our ideas and our thinking a little bit more. And not that the world needs another Tesla dedicated YouTube channel, but we do think there's enough going on that warrants exploration and more discussion. So we're going to kick this off, and hopefully enough of you will find it valuable.
So I want to talk a little bit about my bona fides and yours, Matt, first. So I've done some unique research around Elon's expiring stock options. So in 2021, before Elon did the poll where he said, I'm selling some stock, should I sell some more? A month before that, I said that he must sell his stock in order to pay taxes. I've done some other things with mega packs. Matt's done some unique research, especially around valuing the energy business, but also around resale values on cars that come back off a lease, which might be interesting. Like if Tesla cars from here on out do increase in value because of how good FSD is, that might be an interesting little financial kicker for Tesla.
Yeah, their whole business model, I think, is about to change. And what's kind of crazy to me is that the Wall Street analysts don't really like to model it out. They'll just like to say, "Oh, it could be a big deal, so we'll add an extra $100 billion into the valuation that we've come up with in our DCF," or something like that, rather than actually doing a first principles valuation, building it up and being, okay, if they actually do solve autonomy, here's what this implies. And like one of the nutty things that we've spoken about a little bit in the past, but it seems like so nutty that people just don't even talk about it. But if FSD is actually so good, then they could actually become demand constrained on the production of their vehicles, because everybody would actually want FSD. So your FSD attach rate could actually effectively become 100% on your units. That's not like a base case kind of model assumption, but thinking through the different implications of the technology in the business, and actually doing a discounted cash flow and kind of quarterly earnings estimates with that level of granularity is something that I'm enough of a nerd to enjoy doing.
Mm-hmm. Yeah, there was a Wall Street analyst who recently said that it wasn't possible that Tesla could offer a 25% discount on what Uber and Lyft is charging for their rides. It's like if you take the driver out of the equation, that's where you get a 25% drop in costs right there. They're just surprising to me. Anyhow, let's talk about how good Tesla self-driving software is. So there was a lot of concern with people who had Teslas who were made from maybe the summer of 2022 and before, and those are called hardware 3 cars. And people were referring to the newer cars not as hardware 4, but as AI4, because how good version 13 is. There's very few safety critical disengagements that we're seeing. These are disengagements where you're stopping the system from having an immediate accident. And version 12.6 just came out for the hardware 3 cars, and it's so good. There's someone who has both a Cybertruck on version 13 and a hardware 3 car on 12.6, and essentially they said that 12.6 is extremely comparable to the version 13 on the Cybertruck. So that gave me a lot of hope. And that morning I said that people are going to now start to refer to hardware 3 cars as AI 3 cars because of how good it is.
Well, didn't Tesla? I thought it was Elon that actually started calling them AI3 and AI4. So like the fans adopting that doesn't necessarily surprise me. And I'm not sure that that's actually an indication of
They didn't
their
adopt it though
happiness
after
with it.
After Elon said it, like they didn't adopt it. So they were calling it hardware 3. So people seeing how good it is, they're referring to it now as AI3.
Yeah, I don't know. I'm a little bit more thinking it might just be a slow kind of tale of people still like adopting to the change, because like hardware 3 and hardware 4, it's like it makes very clear sense what that is. Like you're talking about the actual hardware of the vehicle, not the software that's actually getting updated all the time. So to me, like that's just a harder distinction to kind of give up. But I don't know. I'm not so surprised that people are slowly starting to adopt that. I mean, how slow has been the adoption of people stopping saying Twitter and saying X instead? Like that's what are you 2 years into that adoption now,
Yeah.
and it's still a little slow.
Yeah. So my thought on hardware 3 versus hardware 4 is I've been doing the self-driving beta and supervise for 3 years now, and I've never had a safety critical intervention where the type of camera made a difference. So in every time it was extremely clear, like there's a car you're about to hit, like the 3 cameras in front of the car would see this. Um, so I think as far as safety is concerned, that AI3 is going to be up to the task. Now, as far as like how much memory it has and the complexity of the model and having 5 seconds of context rather than 15. That may make a difference that we don't know about in the future. Um, we're getting some questions here. Futuraza, I need to move my screen over.
Shout
Can
out to
you read that,
Brian.
Matt?
It's not a question.
Okay.
He just says the car he bought said it was hardware 4. It doesn't matter what I call it so long as it works. I mean, that's kind of something I wanted to pick up on too. I mean, when there was this like, I don't know, collective sigh of frustration when at the Robotaxi event, Elon said, "Oh, we're not sure if hardware 3 vehicles, sorry, AI3 vehicles, are going to be capable of like robotaxi capabilities." And people are just like, "Oh, you sold a bag of like a bag of I'm blanking on the phrase there, but a bag of goods." And like it's not going to work. And I think it's just like he doesn't actually know. Like I think it's really obvious that there's a lot more juice left to be squeezed on hardware 3. Like they're really pushing the envelope with the hardware 4 cars, and then they're saying, okay, how can we like simplify this model that we've got that works on the performance specs of AI4 and do like a trimmed down version of that on the AI3 that's optimized to run with slightly less compute and the camera restrictions and everything like that. I think the reality is like we just don't know how much more optimization is going to come from there. But my sense is it's going to be like phenomenal. It's going to be way better than it is right now. I mean, this is something we're seeing a lot in the AI world, where you get these like massive, like multi-hundred billion parameter AI models, and then there's like a smaller one and a smaller one, and there's like some version that I think it's Llama. But there's smaller versions that you can actually run on your phone now, which
Wow.
is like kind of wild. So of course that same thing's going to happen with Tesla and with the kind of compression of the self-driving algorithm to work on the older cars. It's just like it's not going to be the bleeding edge, but that's the way that it makes sense. Eventually AI4 is going to be the older cars too, and we're going to have AI5 coming out. So that's just. This is going to be a consistent topic, I think, where like somebody's going to be upset that they don't have the latest and greatest. And to be fair, I was doing my fair share of belly griping about this. I'm like very much wanting to upgrade now and like trying to figure out if it makes sense to do so. So it's
Yeah,
I do think it's going to get really, really good, even for older AI3 cars.
the Model X, the air suspension on that, but also on the Cybertruck, it's definitely giving you some FOMO. Curious if the new Model Y will have a different suspension. Guessing it will. Um, yeah, so let me share this, but I think there's one term you're kind of skirting around. It's called quantizing. So when they shrink the model, they call it quantizing the the model, where they can shrink it by a factor of 2 or 4, and it can run much faster. I just today I just installed on my MacBook Pro something called LM Studio, and I can run some of the open source models for free on my MacBook. And my MacBook's a year old, so it doesn't have as much memory, but it can run some of these quantized models. So let's see, we got another comment about Nitro showing off his FSD to his friends and family. Um, One idea for that is I think it's kind of cool when you do show it off is put your friend in the driver's seat, have them drive the car a bit to get them used to the regenerative braking, and then just turn on the FSD, because like generally you're not having to correct version 13 or 12.6. Um, so because of that, it just blows people's minds to not only see it from the passenger seat, but to be in the driver's seat while it's driving for you.
Yeah,
Just a pro
I
tip
think
there.
there's still so little awareness about this. Like so many of my family members, I've been talking about self-driving for a long time, and a lot of them, it's like, oh, that's kind of interesting, but like, maybe I took them on a drive a year ago or 6 months ago, and they're just like, all right, well, it's probably like 5 or 10 years away. Like, very few people actually understand how good the current state of the art is right now. And so there was this concept like 5 years ago in Tesla stock that like you need butts in seats to sell more cars, because like when people actually experience the car, it's like a mind-blowing experience. It's like, oh, this is better than a gas car in every conceivable metric, maybe except for like long distance road trips. And so I think like you need that same experience of people actually just experiencing it. And I think once you do that, I do think you're going to have like a chat GPT moment, which is something a lot of people have been talking about. I don't even think that's happened yet, because like, there still is so like the awareness is still so low. Like maybe some of the more forward looking analysts and people on Wall Street are aware of this now, which I think is contributing to the stock price rise that we've seen. But I still think the general public, it's like less than 1% that actually has an appreciation for how good Tesla's self-driving is today.
Yeah. Um, it's really good now. I think people don't understand what it can do. Like literally, it can take me from my home to my office with me not having to correct it. It does everything. It steers the car, does acceleration and braking, it reads traffic, it figures out how to get there. Doesn't quite do all the parking yet. It's a little unsure what to do when it gets to destination, but it from when you engage the system, it'll basically take you to your destination, and then you can take over and park from there. It's really good. And a year ago, on version 11, like I literally could not go to or from my work without like a safety critical intervention, or like me like having to aggressively take over. And now I very rarely take over for any reason, and I haven't yet had a safety critical intervention on version 13. So the change that's happened is extremely pronounced. Let's
Yeah,
go ahead.
one more thing on that topic. Like, I think so many people are having different experiences because everyone's kind of opinion on FSD is informed by, their own drives in their own car. And maybe they've got an older Model 3 running AI3. But like, so I've got an AI3 Model Y, used to driving that. And like, obviously it's got significantly better after version 12 and beyond. Similar to you, like I was having like critical disengagements, safety critical disengagement, like every 2 miles probably. It seemed maybe not safety critical, but like at least really bad mistakes that were super annoying and obnoxious. So it's just like I'm enough of a tech nerd and like an early adopter to appreciate just like the learning experience that this is. But it was like not surprising at all that the general public didn't love that when it was making that level of mistakes. So now we're like clearly beyond that, where it for the most part it's good. Every once in a while it does something annoying, but like for the most part it passes the wipe test now. But it still is like a little quirky and slightly unnatural. But going down to Indiana to visit the office and visit you, trying out your Cybertruck and your Model X that are AI4, it's like, oh my gosh, this is so much better. It is such a drastically different experience. I mean, the Model X in particular, like with that air suspension, it is just like be gliding around, being driven by this perfect chauffeur. It was just like, oh, it's such a phenomenal experience. So, you know, there is different, everyone does have different experiences, and where you're driving really does matter. But I'm just like blown away by the progress that they have had. And anyone who's maybe skeptical of it, that might be watching, like, go and do a test drive of a Cybertruck or a Model X or a Model S. Just try one of the newer versions. It is so phenomenal. And the rate of improvement, this is something I've been saying for a long time, and last comment, then we can move on. But like the rate of improvement on the miles per critical intervention is like the single most important factor, because if you're trying to get to robotaxi, the critical metric is you've got to be safer than a human, and hope like preferably like 5 to 10 times safer than a human. And they've gone like they're 10xing in a matter of months that metric. And they're going to continue to do so in the coming months. So this is like 2025. I think is going to be an absolutely massive year in terms of these safety critical interventions. I mean, you just don't see them now on version 13. Like, watch the videos that people are uploading. Like you just do not see these safety critical interventions anymore. And it used to be the case that every single, you know, drive, you'd have at least one, you know, on all these YouTubers. You just don't have that anymore. So that's why this is such a big deal, and it's going to transform the business.
And the way I define it is you're having to hit the brakes to stop an accident that might transpire in like a half second or so. So it's just not happening anymore. And to put a bow on it, our valuation on Tesla, and I think this is conservative. So this is like robotaxi without them licensing it out. And I think with some other conservative assumptions is that, like, once that robotaxi business starts, so, you know, day one, they give their first ride in one city, we think Tesla at that point would have a current valuation of around 1,500 a share. Now, this isn't financial advice, and we do have our disclaimers that we'll be putting in the video description. But that's essentially what we think the business is worth, based off of where the profits would grow to over time. So let's talk a little bit about production, deliveries, and maybe more importantly, batteries. Matt, what was your thoughts about production, deliveries, and batteries?
Yeah, so I did a quick update to my model. I made a post on this shortly after the production and delivery report came out last Thursday. Basically, you know, the deliveries were a bit of a miss, as everyone's aware. You know, it was a somewhat small kind of impact on the earnings per share. But of course, like, everyone kind of freaks out on production and deliveries, because it's like, oh, like, Tesla's just a car company. Look, they missed deliveries by, you know, 10,000, 15,000 vehicles. And so demand must not be there. And then, like, frankly, we've got a little bit of like reasonably fair trauma from the last couple of years of just demand being way softer than we thought. And the only reaction that Tesla management would take to that was to cut prices, which obviously just erodes margin. So like, there's a little bit of this fear still that, like, we're just going to continue to go back on that, you know, path. You know, rather than doing things like advertising, which I think would be helpful to kind of minimize the shorter term impact of, you know, like quarter to quarter volatility. I just think there's still so much of an awareness issue. It seems wild to me that they're not trying more aggressively to pull that demand lever. But, you know, regardless, it's like, that's the kind of fear that creeps back in. That's why we saw the stock, I think, you know, drop so much. It was like, oh no, maybe demand's going to continue to be soft. You know, the models are, you know, stale, whatever, all these narratives that we've been hearing for years. But like, on the energy side, to your point, like, that was a pretty big surprise. And I had 10 gigawatt hours in my model. They delivered 11, which I'm actually really surprised. I thought 10 might have been slightly on the aggressive side, to be honest with you. But the fact that they delivered 11 was just like, wow, okay, they're really, cranking out of Lathrop. But like putting all that together, my earnings per share estimate changed by about 3 cents for the quarter. So it's like a small impact, but it's not the sort of thing that I think justified the massive sell-off that we saw, on last Thursday. Now it did recover since then, but now the whole market's kind of puking and we're kind of back. But it's like these are important things, and I watch the quarterly results, fairly consistently. But like energy surprising on the upside is way more of a big deal, I think, than a small percentage miss on deliveries on the downside, especially since a fair amount of that I think could be explained by juniper production and deliveries potentially in China. So that's a bit of a long-winded answer, but it's like small impacts, and the fact that we're going to be growing these energy storage numbers, which are higher margin already, and they're growing at a much higher rate. Like that's the real story. That's what the market really should be focusing on. What was your reaction? I'm curious.
Well, it was definitely good for cash flow that they sold more vehicles than they produced. That helped. But it would have been better if they sold more and made more. You're spreading that depreciation from the factory over more vehicles, so your cost per car ends up going down. I was a little bit disappointed by the number, but I would agree, like over a longer period of time, it's not going to matter as much. I did see a lot of people, selling their Tesla stock to buy Tesla cars. So like the stock, just like after October, it was like around 220 right before earnings, and it shot up way past like 440. And I've seen a lot of people, finally pull the trigger on getting a Tesla or getting a Cybertruck, that kind of thing. I thought, people buying Teslas with their Tesla profits was going to goose things a little more than it ended up happening. It's just a slight disappointment, but I enjoyed seeing how strong Megapack was. We are going to talk about cover calls. We do have a video that's should be coming out in a few days where I go into it and I talk with someone who's been selling cover calls for 4 years, which is a long time. He's been doing that on Tesla. Since before S&P inclusion, been doing cover calls. We also did a couple videos on our channel about cover calls, and I updated about TSLY's performance. So I think longer term, like the autonomy story and is more important to Tesla, and certainly the developments in energy help. Maybe we could talk a little bit about the tech sell-off that we've seen. Also the volatility in tech and in cryptocurrencies, I think would be good to discuss. I'm very opinionated on this subject, so Matt, I'd like to hear your thoughts first.
Yeah, well, I mean, it's something we've been talking about like all of last year. Really, is pretty much all of the gains in the S&P, at least like through the middle of last year, were concentrated in not even the Magnificent Seven, because Tesla had done nothing. It was just the Magnificent Six. So like all the huge hyperscaler companies that were investing billions of dollars into data centers and AI, it was like that was all the returns of the market for a significant amount of time, and a lot of those names were up like 100% in 6 months to a year.
Literally,
it's like
85% of the gains of the S&P 500, so 500 companies, 85% of the gains came from 6 stocks over like a 5 to 6 quarter period. Pretty crazy.
Yeah, which is like wild. It's like, of course, we've seen them rallying, but when you just take into account how huge their market caps are, like yeah, like they dominate the weighting in the S&P 500, and so then if they all have like crazy, 100% return profiles, then that just dictates what's going to happen. So like we're seeing a little bit of a kind of sell. It's not even a sell off. It's a bit of a consolidation. I would say from the recent highs that we had after the election, and with all the strength that we saw in going into December, and we've consolidated. We've come down a little bit, and I think frankly after the like ridiculous tears that all the tech names, Tesla included, have gone on, it's not too surprising that we're seeing a little bit of a cool down. Frankly, we thought there would be a cool down for Tesla in like the 300s. We trimmed for clients around 340. We ended up reversing that, so it was effectively a push. Tesla just like we were very surprised to see Tesla, pushing all the way into the 460s. And then like from there, it's like everyone's talking about, we're at 500 by the end of the year and all that. And, maybe we should have, trimmed again at that point. But, at the end of the day, it's like the upside story here is just so phenomenal with what's happening with Tesla in particular. But like if these AI plays are phenomenal, if one of these tech companies actually like develops AGI, like that's going to be insanely valuable. But it's a little bit, I think for the other companies, it's a little bit of a kind of crapshoot in terms of like you got to hope that all this investment that they're pouring into all these AI models and all the training, it's insanely capital intensive, not to mention energy intensive too, which has an operating cost associated with it. But like it's unclear how these are going to like come into like monetizable business strategies. And so I think the market's kind of taking a bit of a breather and just saying, all right, let's like maybe wait and see how these results come in, because I don't know, like, so, and I'm curious, that's my view on the high level. I'm curious yours, but then I also like, I hear the bull case for all the amazing technology that Google has up its sleeve, and then I hear somebody else saying like, "Oh, Google's so far behind in the AI race, and like, the stuff that they're doing with
Yeah, so
Gemini
let's save Google for a minute. So I do want to talk about AI. So Nvidia just had their event, and essentially what Jensen shared on stage is that the new version of the chips is 3 times less expensive per dollar spent. So that includes not only the hardware cost, but also the cost of the electricity. So it's 4x faster, just per dollar. But when you include the cost of the electricity, it's just 3x. So the cost of it essentially just declined by like 67%. Um, or
Jeez.
or like per dollar, it allows you to make your model 3 times as bigger for the same price. And oh, by the way, that's exactly what Tesla's going to do for their AI4 cars, is they're going to increase the model size by 3 times, and they're going to increase the context length from 5 seconds to 15. So another 3x. It's probably just happenstance, but still, they are just turning on Cortex in Texas, and we're seeing benefits from that. I think the AI benefit's going to increase. I do think it's important to question, what are the eventual profits going to be? Who's benefiting from it? When Matt and I look at businesses, we can't always find businesses that are benefiting from AI. Like we own a furniture company called Lovesac. It's just very well run and has some very efficient things, but like they're not using AI. It may be on their marketing side or something like that, but
Not in like a structural way
yeah,
that's like going to transform their margins. Certainly, yeah.
yeah, we're looking for businesses that can really transforming from AI. So maybe we could talk a little bit about Google, because I think the whole asset they have in YouTube is crucial. I don't think many people notice this. Google just unveiled um, a text to video thing called Veo. It's called Veo 2, and they showed that off, and like compared to OpenAI's Sora, Veo looks like really good compared to it. Like it's just, I don't know, an order of magnitude better. It's like 10x better. Um, they have this huge library of YouTube videos. Now, granted, OpenAI probably cheated and trained off a lot of YouTube videos, right? Um,
Yep.
but
But they're
those
a
videos,
nonprofit, so don't worry about that. That's fine. They're doing it for the good of humanity.
yeah. So the videos on YouTube, like I think in AI, we're going from text to video, um, and that's
Yeah.
why there's this huge opportunity continuously in front of Nvidia. Like, it isn't suddenly gonna die and be over. Like video, you need a lot more compute than just a bunch of words, just a bunch of text.
Yeah. The file sizes of videos compared to text files, it's wildly different. So yeah, that's, I mean, I agree with you. That's one of the, I think, things that are misunderstood for Nvidia as a catalyst, and you know, for Google, I think, as an AI play, which, you know, we're not long or short Google for clients. So this is definitely not investment advice, but if you kind of look at what they have and where like AI is going, I mean, Jensen had this great kind of diagram, which is pretty obvious, but like where AI models are going, and it's like, you know, to get to like, you're going to go to agentic AI, and then from there real world AI, and to go to real world AI, you're out of like text, you know, like this whole LLM thing, like that doesn't matter anymore. What matters is making sense of the physical world. Like if you want a humanoid robot, like sure, some text might get you some decent, you know, capabilities initially, like we saw with Figure and their OpenAI partnership. But like to really operate, maneuver, and manipulate the real world the way that Optimus and all these other humanoid robots want to, like you got to actually process like a massive amount of video data, and that's going to require huge amounts of compute. That's why we think, you know, Nvidia is still going to have a very bright future ahead, and probably is one of the benefits of Google owning YouTube as well. But I feel like Tesla's just like, like I don't know how you compete with Tesla's positioning, where they've got, you know, the existing fleet of robots out there gathering real world video data, the flywheel of like training clusters, and like the AI team and everything that they've got, and then like actually shipping these iterations out to the fleet. Like that just translates so naturally to the to Optimus. I think other companies are going to have a hard time competing with that.
Yeah, I'm curious.
So,
I'm curious to see how Google enters like the real world AI race.
yeah, well, then there was their announcement recently with Apptronic. So like that seems to be, you know, a partnership that they are focused on. But I heard from a lot of other people that Google has some really exciting stuff kind of in the works also. And I mean, my experience with Gemini when it was first released was like, oh, like Google's the laughing stock. Look, like they think George Washington was a Native American. Like, and it was very easy to just, you know, kind of laugh at backwards Google at that time. But what they've done since then, I think, is actually like really impressive. So I haven't tried their new version that Jason Calacanis was talking about on the All In Pod this past week, but like that sounded extremely impressive. Basically, the ability to do extremely deep research and find a bunch of different sources and actually like develop like a comprehensive kind of consulting type report. That's something that's pretty impressive, and what they've done on protein folding, a lot of stuff in the life sciences could be like massively valuable. So my sense is they've got a lot of different kind of call options embedded in their business model as well.
So we got a question here. What's your opinion about NVIDIA's AV offering? I think that's autonomous vehicle offering.
Yeah.
Was revealed yesterday. I didn't quite complete the video, but I did see where they're talking about having a world model, but they don't have the world model fully developed yet. So it's more like a platform to develop the world model. I'm a little skeptical about other entrants into autonomous vehicles. You need to have a fleet. You need to have the compute, which Google does have the compute, but they don't have the fleet. Um, uh, Tesla certainly has shown that, switching to an end-to-end approach where you're not hard coding all these rules for the vehicles to follow, and you're not needing the detailed maps of the cities. They've showed that that's probably the winning strategy, and I would say there is a risk that people copy that and maybe start to bring other resources to the table. But I think there's limits to what can be accomplished with quote unquote synthetic data, where you're just you're having cars enter the scene or do things, and you're doing it in um,
Yeah.
a way that's not real world.
Simulated and yeah.
Yeah, simulated. Yeah.
Yeah, the other thing with their chip is like it's a generalized solution. So he talked about this one chip being able to handle camera inputs, but also lidar and radar, and it's like, all right, yeah, like you're trying to serve all your customers, so that makes sense. But like I personally would rather be all in on vision only. I think what we're seeing is like vision only works. So like all this other stuff is going to be a crutch, as Elon pointed out like 7 years ago when he first made this this transition to vision only. So like in my mind, you want the chip to be vision only or prioritize for vision only capabilities, and you want it to be as like optimized for like the actual data requirements of the hardware of your specific vehicle, and then from there you want it to also be power optimized so that you're not draining a lot of the battery to run the chip. And so like they're trying to be all things to all people, which makes sense for them, but I don't think that's going to be like the standard bearer of robotaxis in 10 years. Is going to be something that Nvidia has developed personally.
Yeah, I think that while people are going to be reluctant to give Tesla money, I think they would be more in the driver's seat for people to license self-driving or to buy some kind of solution compared to Google. That would be my guess. So at this point, Matt, I want to switch topics, talk a little bit about the phenomena of the all-in Tesla investor. I think, and it's not just Tesla where people are all in. There's people who are all in on Nvidia. There's people who are all in on Bitcoin and MicroStrategy. We're not necessarily endorsing this, but this is something that we help people with when they're all in on Tesla. There's things we do, but I think it's really interesting because it's very unusual, where people, they'll see Elon do something, they'll get triggered in some way, they end up deep diving into the advantages that Tesla has or the advantages that Nvidia has, or they go down the crypto rabbit hole, and then they end up like adding more and more of their investments into this area they're diving into. Um, it's certainly a way to create wealth, but it's also very risky. Um, there have been people who have gone all in on companies uh, that have failed. There's people who switch from Tesla to Nikola, and other frauds that ended up coming out. I think QuantumScape was another company people moved money into. Um, I'm curious, what are your thoughts on the all-in phenomenon?
Yeah. So in my mind, it only makes sense if you've actually done your homework like diligently and you develop the conviction personally. Like nobody else can tell you to go all in. I think I'd start there. Like that's the most fundamental thing. And second, like I've seen some people who've gone all in on these like scammy things, and they're just like like this Bed Bath and Beyond one. Like we saw this video of like people were convinced that there were all these like hidden messages. And like people were just convinced that this thing was going to go to the moon, and it was just like sad. So if you're not kind of sophisticated enough, and frankly, if you're not honest enough with yourself to test your own thesis, then all-in investing is definitely not for you. That said, like if you are an all-in investor, and I think you and I both qualify for that with with Tesla, and I'm also highly concentrated in Lemonade as well. But like in my mind, that's not any different than like a business owner who has like 90% of their wealth tied up in their business, and they understand it in and out, and like like nobody's like, oh my gosh, what's wrong with you? You need to sell 20% of your business to a private equity firm so that you can take some chips off the table. When people want to do that, that's totally fine. But like if you've done the homework and you understand the risks, and you're like intellectually honest with yourself about your thesis, listening to the bears and everything like that, and you are just convinced that the market has it wrong, I think it's like you said, a really great way to generate wealth. If you're right, it's risky, so you got to be okay with that. You can't invest more than you're willing to lose. But I do think that this is a relatively new phenomenon. But when you kind of, I'll stop there because I've got a lot of other thoughts on it too. But I'm curious, what's your kind of initial response to that same question?
Yeah, so I'm a CFA charter holder. I've been a CFA charter holder for so long. I forget what year it was. I think it's like 2006 or so. In 2007, I attended or no, I think it's like 2011 in Boston. I attended a thing, and I saw this really good presentation, and they talked about like when you're a concentrated investor, it's a way to create wealth, but it's also a way to destroy wealth. So it's definitely a risky approach to take. And Vigo mentioned something here. When you combine it with margin or options, then that definitely increases the risk. Whenever you're adding risk upon risk, and I didn't really talk about this in the whole tech thing that we were talking about. When you're adding margin and you're adding options, sorry, we got someone in the back trying to
get your hands off the controls.
You can tell this is our first live. It can be very dangerous. I know someone who got to like $35 million in Tesla, and calls and stock, and they had margin, and it got to the point where they got margin called. They were forced to sell their stock, which triggered taxes, and they were forced to sell more. And they got to the point where they owed more money to the IRS than what was left in their account after all the margin calls were done.
Oh my gosh.
So
that's a horrifying story.
35 million to close to nothing. So like these things can happen. So the guy in Canada that went from like 400 million to zero or whatever in Tesla, that's not
that's a story that came out recently. Yeah, the suing his broker. Yeah.
That can happen. So I think it's risky. It's something I've done. I'm not necessarily recommending it for others. But you look, and I'm not trying to be a billionaire, but you look at all the billionaires, and they didn't become a billionaire by having all their money spread around the S&P 500. Like, no billionaire became a billionaire that way.
I've got a personal story on that front. So, I was working for a utility for a while, kind of early on in my career, and I had been doing investment banking before, and so I was like, like more sophisticated than the average utility worker, at least in terms of financial stuff. And so like I got a stock award my first year there. I was like $10,000 or something. I was like, oh, that's like nice. That's pretty cool. But like the CFO invited me to his office, and he's like, Matt, like it's really important. If you want to build wealth, you've got to own stocks. And so just don't touch this. All right. And I'm like, oh, this is a utility stock with a beta of 0.5, and you're lecturing me on how to build wealth with this, like, like concentrating on a utility stock when I'm in my early 30s here. I was like, this is like retarded what you're telling me right now. And you're like the most sophisticated guy at our company. So like, I completely agree. Like investing, of course, saving, of course, like that's actually super important. I think like saving is the non-sexy part of it that we actually really value. And I think should get spoken about a little bit more, but like investing in a utility in your 30s, or investing in a diversified book of even the S&P 500. If you don't have the tolerance, I think probably like 95% plus percent people probably should be invested in just diversified. But if you have done the homework and understand things and are sophisticated enough, then I agree. Like you're not going to achieve concentration is the way to generate that wealth.
So we're not going to talk about covered calls every week, but we will talk about this week. Kyle's asking, are covered calls considered low risk? Now, technically, it does lower your risk. You collect some premium, you sell a little bit of the upside. So like you on a weekly basis, you sell a tiny bit of the upside. Now you can screw it up and end up costing yourself a bunch of shares. You can when you have weeks that win, you're gaining shares, but then when you have losing weeks, you lose shares. And sometimes people will do things to avoid losing shares that end up costing them more shares. So it's something that we've done a lot of research on. It requires discipline. Dan B says he sells way out of money calls weekly and then buys Tesla with the premium. So that's what happens when you have weeks that work, but there are weeks that don't work. There was another question earlier where Bananas asked, do you change your cover call strategy when Tesla stock is on a rampage versus when it is consolidating? So we did a video. If you search for Rebellionaire Tesla cover calls, we did a video about the experience in 2020. So the stock was up 730% in 2020. That's an 8x, 8.3x. And you'd think that Tesla cover calls were terrible in 2020. But we actually show a back test where cover calls added value, where if you just followed a simple strategy and did it at the same time every week, did the same thing every week, and it would have added to shares. So that doesn't mean that'll be the future experience next time Tesla stock goes on a rampage. There are
also really important to note though that like most of the strategies did actually destroy a lot of value relative to buy and hold. So like you can't just like do covered calls, because like the devil is very much in the details with covered calls. And I think we've done some analysis that's unique that nobody else has done in terms of kind of figuring out what is the right strategy. How do you choose the right strike price and all that? So it's hard. There's a lot of work that goes into it, a lot of discipline needed to stick with it. But generally speaking, when it's on a rampage, volatility is higher, and that's a good thing for selling covered calls.
So we got this one from Greg. He's a TSLY
Greg
fanboy.
Greg fanboy.
So TSLY, they sell cover calls, in my opinion, the wrong way. We've done 2 videos on it. We show that if you had done it from 2013 to 2023 and did it in the way that they do, you would have cost yourself like 85% of your shares. So you'd be 85% poorer than just owning the stock itself. And I did an update to the TSLY video where I talked about how TSLY did in 2023 versus Tesla stock. So when people are choosing to own TSLY, typically they're selling Tesla stock to buy it because they see this big dividend that TSLY offers, and they think it's some magical money tree. So we'll put that on screen, but you can find like TSLY Rebellionaire. So Essentially
go ahead.
Tesla stock was up. I think in 2023 is up 100%, and TSLY was up 50%. So right there, you lost 25% of your shares. Then this year, the percentages were a little different, but essentially TSLY underperformed Tesla stock. And this was through like December 29th or something like that. It underperformed by 23%. So we believe when you do covered calls, it needs to be superior to owning the stock. Otherwise, we don't implement it. If we thought it would be worse, we wouldn't be like trying the strategy and tactic that we're doing. Go ahead, Matt.
Well, yeah, I mean, I was just going to say, like, well, I'll take your last point first. I mean, before we even decided to do covered calls, like, the question was, does it make sense to do that? So that's where we started. You know, it wasn't like, hey, let's do covered calls for our clients. It was, does this actually make sense? And so that led to this huge analysis that we did, that we've done a couple of videos on. But I mean, just if you're considering covered calls or investing in TSLY or anything, like, keep in mind what's important and what are you trying to do. So, like, I think for us, Bradford, our main kind of target is long-term appreciation with Tesla, because we believe that it's you know, they're doing things that are going to change the world, that are going to be extremely valuable, that are going to lead the share price to go significantly higher from here. Not investment advice, but that's kind of our base case thesis. So if you believe that that's true, then selling covered calls puts some of that appreciation at risk. And so if you're chasing like a 5, 7, 10% yield, I don't know exactly what TSLY is trading, then, like, if Tesla is flat or down, then of course you'll outperform Tesla. So that comment is right. Like, in certain scenarios, TSLY definitely will perform better. But if you believe that there's like multi-X upside from here, then what our research has shown is that they're selling covered calls that are too risky, that are too near the money, relative to the upside potential that we think is within the stock. So, like, you'll still be up if Tesla does what we think it'll do, but you won't be up as much as if you had just held the shares. And so, you know, if you are low conviction on Tesla and you want a little extra yield, absolutely go, like, do TSLY. But if you have like long-term conviction in where this is going and think it's going to be a lot higher, then I wouldn't recommend putting your Tesla shares at risk by investing in something like that.
Yeah, so
Dead space. I left you speechless.
Yeah, TSLY, like, people would be better off, like, if you want to generate some income from your Tesla stock and you don't want to sell individual cover calls, you're best off just trimming some of your shares, because TSLY is straight up destroyed shares. So um, so let's talk a little bit about I think we'll save like Canada, Greenland, and the Panama Canal for next week, maybe, Matt.
Yeah, maybe those will be U.S. states by this time next month. It's so fun. Like, this stuff just seems like a joke. Like, the world, it really does seem like it's scripted right now. It's just so kind of absurd.
I don't know if this person is talking about Adrian Dittman, but it said Elon just said that Tesla employees are testing FSD unsupervised. So this is not new news. So Tesla employees have been testing FSD unsupervised at Texas. So they have the cyber cab going around the campus in Texas. Some people are asking about, you know, the role Lemonade would have if Tesla figures out self-driving. I think we'll talk about that another time. So some things that are funny to me is, so on X, Adrian Dittman is a Rebellionaire creator. So we have this logo thing, and we support various Tesla creators. Futuraza is one of them. He's been in the comments today. And so they get the Rebellionaire logo badge. They get a little higher visibility on X. And occasionally some people will get curious and they'll click on that logo and find out more about Rebellionaire at rebellionaire.com. What's funny to me about Adrian Dittman is because of politics, um, the far left and the far right have gotten triggered by Elon, and then they're hearing Adrian Dittman in his spaces, and he sounds very similar to Elon. He just has a similar voice, and they're both very interesting people. So Adrian Dittman talks a lot about weird things, but also AI, acceleration, SpaceX,
Video
all kinds of
games.
things, video games. Yeah. So it's funny to me that they're listening to something brief from Adrian, and they're thinking that it's Elon Musk like hanging out in a Twitter space for just randomly for hours on end, and it's just like they're two different people.
Like I kind of thought Tesla Q was dead. And then I like see all these crazy conspiracy theories. My favorite, which I posted recently, was somebody's like, does anyone with an IQ over 80 seriously believe that Elon Musk isn't Adrian Dittman? It's just like these people are so convinced that they're right, and they're just so stupid with like these crazy conspiracy theories. And it's just like there was somebody else who you responded to recently that said like, oh, Adrian works for Rebellionaire, but like he's not listed on the actual Halter Ferguson Financial, which is the firm that that you own, that we do all this work through. Like Adrian Dittman is not listed as an employee on Rebellionaire. It's like, yeah, he's not. He's an ex affiliate. He's not a Halter Ferguson Financial affiliate. But like all these people are doing these like crazy conspiracy theories, but like they're just disproven so easily. And it's shocking to me that after taking such a hard L on Tesla in 2020 and 2021, like, I don't know, I would personally want to like retreat off somewhere, or like at least not say so much crazy stuff. But it just seems like they're coming out of the woodwork again.
Yeah. Yeah. And Adrian talks different too. Like he talks much quicker. He talks a little slower and is a little more awkward. And it's funny to me that like 5 years ago or more, like Tesla Q was calling Elon Musk like a carnival barker and saying he's like the world's greatest showman and salesman. But like Elon's kind of awkward. Like I think we all have to agree he's a little awkward.
His presentations have never been like good. Like you compare his presentations with what Steve Jobs would do, and it's like, can you just like practice once before you go out on stage? But he just nope. He's spending all his time actually building this stuff.
Yeah, it's all like scripted with Apple. It's just like it makes me shake my head. I do want to say something. Like on X, they call it affiliate badge. People are not an affiliate of ours. They don't collect a commission if someone sees something that Futuraza does and then clicks on our website and finds out more and then ends up becoming a client. As of today, like there's no one that's an affiliate of ours that we're paying for bringing us new business. So one other thing I want to add is in the description, we're going to add a link to a video that talks about some interesting wrinkles in the whole Cybertruck fireworks explosion that happened in Las Vegas. It was, packed with fireworks and fuel, and there was a dead person inside. Some interesting wrinkles in that from like these Green Beret types in the military. Super fascinating. One quick question. Yeah, so that's on the screen now, tinyurl.com/reb31. So that's a podcast on YouTube. Quick question here. Do we own Nvidia stock? So we do own that for clients. It's more for our diversified clients. It's not a high conviction holding for us. So for us to own an individual stock, we have certain standards. Matt, maybe you could share those.
Yeah, so it's like for our higher conviction names, we think it should essentially be able to outperform Tesla, in the short to medium term, which is a pretty high bar if you're, as kind of convicted and bullish on Tesla as we are. So, there's not many companies that do kind of meet that threshold, but Lemonade's one we've been talking about for a long time, and Lemonade actually outperformed Tesla pretty significantly recently. So the nice thing about having these high conviction names is when Lemonade rallies, you can take some of those profits and turn around and buy more Teslas. So that's kind of why we do it. For our diversified clients, it needs to be a double in the next 3 years based on our valuation work that we're doing. So that's the kind of threshold. And so we're making our trimming and adding and our kind of rebalancing decisions around, how those the companies are trading relative to those. So it is a relatively small pool of stocks, only about 9 that we have even for our diversified clients, much fewer for our Rebellionaire clients. But a big part of what we're doing is just trying to keep our ear to the ground and find other companies which, like Tesla, are misunderstood, underappreciated, or just have a business model that Wall Street can't get their head around. So Lemonade has been a phenomenal example of that, and it's just funny because even though like people started to get it, I still don't really think the most of the analysts covering Lemonade really actually get it yet.
Your internet connection is a little stuttering, but I think we're getting it fine. We got a question here. Our ex users with the Rebellionaire logo are clients. So generally not the case that they are. We do have one that is a client now, and we're not gonna like update people further on that. So like I think there's over 30 people with the Rebellionaire badge. So basically there's no financial relationship. We're mainly just offering them the badge on X, and then we get higher visibility. Now we do have some things with some YouTube creators where there is like a more of an ongoing financial relationship where they mention us.
Yeah, but the other thing, like, because I see a lot of people ask questions about this, and I think it is worth explaining. I mean, Bradford, for years, I used to have a YouTube channel, and you supported me on that, like through Patreon. You've always been a supporter, I think, of people who are doing like good, high quality research and putting their thoughts out there publicly. And so this Rebellionaire badge, like, while it increases our visibility out there in the Tesla world a bit, I think ultimately where it comes from is you wanting to support good content creators who are putting out good information, and the Rebellionaire badge that they get helps them to have higher reach on X. So I think that's the main rationale for it. I think is really just that we want to be supporting the Tesla community and content creators. I mean, we hosted a Tesla Owners of Michigan event last year. So we try to do stuff like that to support the community, because it's been like you and I have benefited a huge amount personally just with like the great research that other people do out there. Like it's valuable information for investors, and we want to put that high quality information out there. The other thing I want to say is, like, we don't do any sort of like content moderation. We're not endorsing anything they said. Like, you'll see people with the Rebellionaire like getting disagreements with each other sometimes. So it's like a full like free speech, Wild West. Like, we're not endorsing nor like decrying anything that people say outright. Like, we really think it's important to let the creators like retain their own voice without any sort of editorial input. So just to make that perfectly clear, like, there's not Bradford and I behind the scenes like telling people what to post or anything like that.
Yeah. I wouldn't be here without Galileo Russell, Rob Mauer, and then like discovering the whole community on X, and then pointing me to great content, and then other creators that came along, like Dylan Loomis from Electrified, and Jordan Giesecke of The Limiting Factor. Like he reads all these patents. Like I guess you could have Chat GPT do that for you now, but like no way I could read all those patents and yeah, have the patience to understand all that. Um, so like yeah, I'm very appreciative for all the creators out there with their unique content and their unique takes, and that's why I've supported them. I think we get some more questions about Lemonade. We will talk more Lemonade in the future. Um, but we're going to wrap it up for now. Check out our disclaimer. Check out the videos in the description. And with that, go ahead and leave the disclaimer up a little more, Jordan. Um, so, you know, this is not financial advice. This is in our opinion. Do your own research for entertainment purposes only. Trade at your own risk. Past performance is no guarantee of future returns. All that good stuff. Good to join you. We hope to do this vast majority of Tuesdays at 4 p.m.
Eastern.
Eastern, 1 p.m. Pacific, 2 Mountain, and 3 Central. And
Wow, doing
I
all the
think
conversions.
in
What is it in
Germany,
Greenland time though?
in Germany, it's 11 p.m. Greenland, that's a new one. I think maybe you add an hour for Greenland. We might need to memorize that soon. Panama, I think might be on Pacific time. We'll
I would guess
gotta
Central. I
find
don't
that one
know.
out. Maybe Vigo knows that one. Yeah, so with that, I'm going to say bye for now.
Bye for now.